Hello, everybody. Welcome to your Thursday edition of the TraderMerlin Show. Should be an exciting one today. Of course, wow, I didn't even realize I didn't even brush my hair today. You know, it's those kind of days you don't even brush your hair to do a show. We're going to have some fun on the program. At the end of this, I know a lot of you have been dying to ask me about what's going on with Luna and Terra and crypto. I'll get to that later on in the show because I definitely have my feelings and thoughts about that. A quick shout out to those that did attend in Las Vegas. Good to see you, Lori, up in Las Vegas. Also saw Ron up there, so thank you guys for coming out and coming to the presentation. Even though it was a thinly attended presentation just because it was a light expo, it was great to see you guys and meet you face to face. So let's talk about program for today. I had a gentleman on the program a while back. We had him actually on a year ago today. It was May 12th of 2021. And he came on the program. We talked about ARK, the ARK fund. We said, is it a sinking ship? And we're going to get into that because you look in historically, and of course, give him a victory lap for that one. But gentleman's got his own channel on YouTube. He's got a ton of great videos. We always talk about going to the investor channel. It's Investor Videos is his Twitter handle. My guest today joining me from the great state of California, talking about the great valuation reset. We've got Colin Tedards joining us. Colin, welcome back to the program, my friend.
Thank you, Merlin. It's great to see you. Great to be back on. And just, like you said, a year ago, we called that the ARK Innovation Fund just seemed overvalued from all the fundamental analysis that we did. Maybe from a technical perspective, it had momentum and all that other stuff. But the Palantirs, the Teladocs, the skills, she was investing. It's like the biggest garbage that I had seen, at least from a valuation perspective. And then we've seen basically all those stocks, over the last 2 or 3 quarters just get absolutely obliterated.
Yeah.
And so, I'm going to pat myself on the back a little bit there, but there was a lot of people calling the top on the speculative trade for many years, if not many months. And so I've basically piggybacked off a lot of other people's research.
Yeah, but you know what, man? Here, I'm going to show the graphic here for everybody. Here's the artwork we did for the video, which you can find at my YouTube channel, which is TraderMerlin. You just type in ARKK, and you'll see this, which I thought was a great graphic, actually. You got the ship sinking, and we had question mark and exclamation point, because at that moment in time, no one really knew if that thing was going to sink, But if you look at what's happened since then, let's bring up ARKK. That vertical blue line represents the day he was on the show. And again, you said there was a bunch of people calling for it. It's one thing to call a market top. It's one thing to say that this company sucks and ARK's going down. But what I love about when you're on the program is you are running through the balance sheet and you're saying, hey, look at this and this and this, and here's the reasons why. So everybody can make a call, but you backed it up. So I appreciate that. Right now you're looking at ARK at $38 when you were on the program. It was back over $100. So congrats on that one. That was a pretty good call. Of course, in hindsight, we never know exactly what's going to happen, but I hope you shorted and made some money on that one as well.
I wish I was that good. There's been a lot of times when I've been absolutely convinced some stocks, certainly a sector of stocks that she was investing in, was going to go down. I just have not. I think I'm just too slanted. I'm a buy and hold investor, okay, and kind of fundamental investors combined with a small amount of technicals. And so I don't often play the short side, but this was kind of a learning lesson to me when it was that freaking obvious that when we looked at the operating income these companies had, the net income, yes, the revenue growth was okay, but you're paying like 100 times sales for some of these companies, which means like 100 years, you're paying for like sales 100 years into the future. It was just ridiculous. And we just had to have those valuations come back. Either those companies had to explode in growth, which just simply doesn't happen in most things, right? But we didn't see that. Obviously, the valuation kind of reset on a lot of those stocks. I think that kind of started the chain that we're seeing. The Cathie Wood type stocks, the speculative, unprofitable stocks, those started winding down, I believe, in Q3, Q4, without having a chart up in front of me. Q3, Q4, it kind of felt like those stocks started to peak out and trend down. And then we started to see crypto start to trend down. Now we're seeing the broader equity markets. And now we're seeing the companies, which I still have my portfolio wrapped around, the mega cap profitable buyback dividend paying stocks like the Microsofts, the Apples, the Googles, like they're tanking as well at the current time. And so I think it's just leading me to believe that we've got some kind of valuation reset on our hands. We saw it in 1999 or 1999, 2000, 2001. All those tech stocks had to get reset in value. We saw it again in '08 when housing got reset. That reset the entire financial market as well. I think now you're just having an everything reset. Crypto, NFTs, everything is simply having to reset at the current time. And how far it will reset is, I think, up for debate. But my thesis is this reset we won't snap back like we did back in March of 2020, where you had an orderly sell down in the markets based on COVID. And it just rallied back because the Fed stepped in, the government stepped in, trillions of dollars. I don't think we're going to see that this time. And so I think these valuations are resetting to a new level, and it'll be like housing prices after 2010. Yes, they've gone up tremendously, but if you go and look at the prices, they actually went up in kind of an orderly fashion. They've only more recently gone parabolic. So that's kind of where I'm at. And, with the Cathie Wood Fund, I looked 5-year performance. This was yesterday, doesn't include today's price action, but 5-year performance, she's no longer beating the S&P 500, and she's no longer beating Berkshire Hathaway. Berkshire Hathaway up 90% over the last 5 years, ARK up about 40%. So she's not even beating Warren Buffett anymore, which is not a surprise to me or probably anybody watching.
Yeah, no surprise.
But she's no longer beating the S&P 500 either. S&P 500's up still about 65% last 5 years. So she's underperforming that.
Well, if you look at the last, let me see if I get the relative. I know I'm not exact snapping here, but roughly, if you look at the last few months when Colin was talking about, it was really that fourth quarter of 2020 where, it surged in the first quarter. I mean, it was ridiculous. Down to under $30 and rose all the way up to 160 and change. Now you're down about 76%. So you fall 76% in a little over a year. That obviously is going to eat into your rate of return over 5-year performance. And, now if you look where we're at and go back 5 years, that brings us to here. She's still trending up, right? She's still got an uptrend in the value of her fund, but nowhere near what it was. And, I always look back at pictures like this, everybody, and if you see something that is trending fine and then has this parabolic move, and it went absolutely parabolic, I'll edit the lines out and show you. This is somewhat normal right here from 2015 to 2020, right? It was just trending up, some good moves, and then it does that. You got to tell yourself at some point this is going to break. And I think that this is actually the inverse of a question that was just asked in our chat room, which was from, where'd it go? It's close to Achilles, but it looks like Achilles. He says, question for both of you. How do you start a position in companies whose charts have completely broken down? Companies like Airbnb. Achilles, I'd actually say that Airbnb hasn't even really broken down, right? So here's Airbnb. That's not, it's down, but, you look at something like Zoom, that's bad. You look at Teladoc that Colin was talking about earlier, TDOC. This is a murder scene. We're up over 300, now you're at 30. That's 90% drop. That's insane. It is a great question, Colin. How do you, since you're more of a fundamentals guy, how do you look at these valuations and say, okay, it's correcting. At a certain point, I'm going to be a buyer because of X, Y, and Z. What sort of things are you looking for?
Okay, so with a stock like Airbnb, I would treat that a little bit differently than, say, like an Apple or a Google, which has a much longer track record of knowing their valuation and maybe projecting out on the sales as well. Stocks like Airbnb I think stocks like these are going to have really, really massive beta. So if we do have kind of some snapback rally, the really, really beaten down stuff is likely to snap back. If you're looking for like really kind of popcorn type trades, stuff like that is probably where I would focus. But I think it's difficult to look at stuff like that because there's just no track record. Okay. Airbnb is still a $73 billion company, which is just insane. If you look at the amount of sales this company had, I just did a video on them. I think they're just north of about $1 billion in sales in a quarter. And so it's still an insane valuation from a price to sales basis. You're still paying up a ton of money for future sales. Now, do I think this is a good company? Do I think they have a good product? Sure. But the valuation, quite frankly, is still record high. Whereas it's a little more comfortable when you're looking at a Google or you're looking at a Microsoft and you're looking at kind of traditional price to sales, price to earnings on not only that company, but also the sector that they deal in. And we're starting to see those pull back to more traditional type valuations that I think would be considered on the low end. So like a Google trading maybe 14, 50 times future earnings makes a little bit more sense.
What are they at right now? I've got Google up here.
I think with these speculative stocks, if we go into like, a winter of higher rates, lower growth, a recession, like how is that going to really impact the stocks that have never been through that? Okay. Airbnb has never really gone through a prolonged recession. And so how does it come out on the other side? Whereas we can look at Microsoft, we can look at Google and kind of see how those companies have handled those situations. So for me, like I would play it very, very safe with the more speculative stuff, the stuff that doesn't pay dividends, the stuff that's not buying back its shares, the stuff that's fallen off a cliff. I think there's some great trading opportunities. They'll likely bounce, but the fundamentals are still, I think, a little overvalued for some of these stocks, especially going forward in an uncertain environment. Okay, if we were more certain about the future, then I think an Airbnb might make a little bit more sense. But I think right now, we are not sure where we're going to be in Q3, Q4 on inflation, let alone Q3, Q4 next year or 2 years down the road. If we have 6, 7, 8% inflation and it doesn't ever come back, if gas stays at $6, like how many people are going to be taking a vacation in a year if gas is $6 for the next 12 months?
Right.
It's just going to really impact things and how well certain stocks navigate that environment. I tell you what, it's a $1 million question.
More than $1 million.
It's extremely difficult, in my opinion, to value the newer companies and the ones that still have valuations, in my opinion, that are still massively elevated.
There's a couple questions here or comments, and there's one comment about best way to catch a falling knife is let it hit the floor. You're absolutely right, Patrick. In the situation, you look at something like, I don't need to pick anyone you want here, but we had Airbnb up. That's a falling knife, and there is no floor on Airbnb because it's already lower than what it IPO'd at. You look at something like TDOC, which we just looked at. Well, I can go all the way out to some long-term historical levels, and we do see some demand, which you could be using demand zones as buy points here, but I think if you're going exclusively off supply and demand, I think you're kind of making a mistake because the overwhelming trend of the S&P. So here's the S&P right here. We have been breaking lower, making lower lows, making lower lows. So in my mind, we're now going to start to see this accelerate. It'll probably bounce here over the next week, give a little bit of a breather, and then make new lows. So if that's the case, I don't know if I necessarily want to be catching a falling knife here, And I think what's good about this is you can do a combination of what Colin does and what I'm doing, which is I'm predominantly technicals. Colin does a mix of both. But, if you're looking at something and you've ran the numbers and you say, okay, fundamentally, it looks like it might be undervalued. Okay, that's fine. But if the chart still tells you that the trend is down, then you stay out of it until it starts to turn. So I personally would be using that combination of if I find something that's technically undervalued, it could still be much more undervalued going forward. So wait for price to prove to you because we don't know whether it's just a small pullback and we go to all-time highs, we chop sideways, we go down 20%, or we don't know whether this is just the absolute mother of crashes as the bond market and all this stuff implodes. We just don't know. So I would be careful taking a stab at buying and picking bottoms here. As you guys know, picking bottoms leaves you with stinky fingers. So there you go. Are there any ones that you've looked at now and said that the valuations are actually relatively okay or maybe even low valuations compared to what they should be? Anything out there in that horizon, or is it just all way overvalued?
I mean, I'm taking nibbles at the core investments. So my core investments, essentially mega cap tech, because they have the balance sheet, they have the cash flows, they have the profits, they have the profit margins. So you're looking at the Apples, the Microsofts, the Googles, certainly. And I actually tossed Tesla in there as kind of the speculative performer of that group because they have really high profit margins and they have really high growth at the same time. And they have the tailwind of potentially maybe $5 to $6 gas out here in California. So yeah. I feel like there are some stocks where I would nibble here, but if let's just say I had a $10,000 to spend, quite frankly, I'd do maybe $1,000 at a time. Because if we keep having an unwinding of these markets, Well, those stocks back in 2008 and 2009, Apple went down 40, 50%. Microsoft went down the same. Google went down 40, 50, 60%. Okay, Tesla probably would go down 70 or 80%. So there's still an unwinding that could happen. And I think there's certainly some opportunities here. I think we have some kind of maybe a bear market rally, but I'm not super excited about jumping in because my thesis now is we'll have 3 quarters, 4 quarters, 6 quarters to be able to comfortably buy in at some lower valuations. I don't see a snapback. And this was my if you brought me on like February or March of 2020, my thesis would have been the same. Oh, we're in a pandemic, guys. We're gonna have all the way into next year, 2 years to buy these stocks. Well, they snap back. So I could be wrong again. But I think I think a lot of people understand what caused that massive spike back in March of 2020 was nothing related to the fundamentals. It was really the government just dumped money onto everything. And of course, everything's going to inflate in value. Now I think we have the opposite. They're actually pulling that money out of the system, so to speak. And I think everything's just going to stay depressed for a while. So I wouldn't be in a hurry if I have cash on the sidelines. If someone out there does have cash on the sideline, I wouldn't be in a hurry because if rates keep ticking up, if we get 5%, 6%, 7%, well, that cash could comfortably earn interest while I'm waiting. And if interest rates continue to go up, well, I think equity prices either stay flat or continue to go down. I just don't see a catalyst right now that is a V-shaped recovery. Like what is going to send Microsoft back to the all-time highs, let alone like Alibaba or Square or PayPal? Like why would Square all of a sudden go back to like a $200 billion valuation? Like why would it do that? I don't see anything in the cards that would explain something like that. So
just so you know, Square's down 77% since August of last year.
I mean it's just incredible. Okay, and it's like it still has a $44 billion market cap. This is an unprofitable company, and we're not talking about major revenues either. Okay, it's not like they have $30 billion worth of revenue and they're trading at like 1.5 times sales, 2 times sales or something. No, I mean, we're talking about a $44 billion market cap on a stock like that. For it to double back to 80, I don't know. I just don't see that happening. Yeah. And the same thing goes with an Apple or maybe an Amazon is probably a better example where the price of that stock has gotten hammered. I think Amazon now is about $1 trillion valuation. Yeah, right at about $1 trillion if this data is right that I'm looking at. Okay, what's going to send Amazon back to $2 trillion in short order? We're talking about maybe 4 quarters or so.
I'm with you. I don't see it.
I don't see it. They've already pulled back their guidance for Q2. Okay. So, I cover every one of these companies and I read more financial documents than I even show on my channel. I'm going through all the companies that I possibly can go through. Amazon pulled in their Q2 guidance, sales guidance. They're going to grow to like low single digits growth on the revenue side. Like, are they really going to come on a conference call in Q2 and all of a sudden say, oh yeah, Q3 is going to be great, guys. And Q4 is going to be great, guys. Interest rates are higher. The home value that you live in is probably going to be going down. Gas is going to still be at $6. Are they really going to say Q3, Q4 is going to be great? No, I think they're going to come on that call and say, we might even decline sales volume over the next couple of quarters. What's going to happen then to this? I mean, it's not going to go to $2 trillion on low single digit or negative sales growth. So I think we've got some quarters here. I think, the newer investor that's only seen like the Powell pivot, the stocks rocket off the Powell pivot. I think that was back in 18 or 19. And then we saw obviously stocks rocket off of 2020. People are used to that move. Stocks crash and then they immediately go back up. I just don't see that this time. And so I think people can be patient And considering where interest rates are going, you can be comforted by saying, okay, if I miss a little bit of an equity rally, well, interest rates still might be 4, 5, 6%. I can invest in some REITs. I can invest in maybe some bonds, who knows, and earn a decent return and wait for these equity markets to kind of, find some kind of footing, find some kind of bottom.
Yeah.
Okay. I mean,
Amazon down 44% off the highs, folks, just in case you wanted to know. I mean, and a lot of people saying, oh, market's not going to drop that much. I had this chart up here a while back. I see a few of you in your room saying 3,500. Look, 3,500 could hit by the end of the month. I mean, right now we're at 39. You go back roughly 1 month. Let's go to since the 1st of April, right? So a little over a month. We're at, closing price of 4,500. So we've dropped 600 points. Well, that's only 400 or 480 points away from that 3,500 level. Look, if this doesn't right itself and the snowball starts rolling and people start getting margin calls and liquidating and the metrics start to change, I know this is nuts, but the pandemic lows are potentially in play. Obviously, we have to wait and see what the markets do, but I mean, that's down at 2,100, 2,180. I mean, insane for a lot of people, but that's a 50% correction off of those all-time highs. And it's funny, there was a guy at the expo or the trade show I went to in Vegas, and he's like, there's no way that would ever happen. I said, because you say that, that's why it's going to happen. That would be a 54% retracement in our overall markets, which seems absolutely inconceivable, but I contend that a 50% retracement in the markets is natural, right? It's a correction of what Colin's pointing out is just an overvaluation, where you have valuations get way ahead of themselves. Everyone's loving the gravy train, and we had all these crazy catalysts. Those yellow boxes are the 50% previous 50%ers. We could get one, And again, I think that the important part is just to it's not about freaking out. And I think what Colin mentioned is interesting. He's saying, look, I might buy some of this, I might buy some of this. I'm actually just saying I'm going to short it because I'm going to go with whatever that trend is. And hopefully I will capitalize on downside movement here. Granted, I've been wrong a few times. I've actually been right quite a few times as well. The key is to make sure that I don't get slaughtered on any of these decisions I'm making. But right now I've got one short position left. I closed out most of them last week. If we get a nice bounce here in the next few days, I'll probably look to open up some brand new short positions, but I want to get better prices for my options out there. So why you don't short these markets, do you?
Not typically. This last few weeks. Okay, so I'm sitting on 20% cash, which is a large amount for me, and so I'm like trying to figure out what I'm going to do with that cash, and so this to just play the short side, okay? And it's just really short. And like I told you before we went on air, so instead of my long portfolio going down 3%, I'm going down 2.8% or 2.5%. And just shaving off a couple $100 or a couple $1,000 off of my losses for the day makes me feel okay? Because I'm still, I still have the long-term focus on the core stocks that I have. But, I've shed every speculative stock that I own. I only own a very, very narrow group of stocks that have incredible amount of financials and a tremendous amount of cash flow and a dominant position in their market. Those are the only stocks I want to hold. And am I getting smoked? Absolutely. My portfolio is down probably at least as much as the NASDAQ is this year. Okay. And it's getting smoked, but it's been smoked in 08, 09. I got smoked in 1990, okay, or 1999. I've been here before, okay? And so you're going to get wiped out. The key is if you have time, which I think we're going to have, if we have 12 months, 24 months to get back into these new valuations, well, there's your opportunity. Okay, so instead of focusing on, oh yeah, my portfolio is down 20,000, like who cares? That it's over, it's gone, okay? And so now it's about, 5 years, 6 years down the line. Can Amazon, which is now $1 trillion company, can they grow to 3 trillion in 6 to 10 years? I think you can start making those arguments, but we've got to get through this down period. So I don't typically short. It's probably something I should do. I have the instincts for it, considering we were on here a year ago talking about Cathie Wood stocks, and every one of them was just, it was so easy to look at the statement of operations, the revenue, the profits, the egregious stock-based compensation, the negative cash flows, and say, this doesn't make any sense.
Right.
But sometimes, look, people have said the same thing about crypto,
Yep.
and for 5 years, and you would have gotten smoked if you tried to short something like that, even after today's drops and this week and the last months. So if I were to short, like when I'm doing shorting, I'm just using like an ETF. Reverse ETF or whatever. Yep. I'm in and out of these things. Okay. I mean, I probably did like 18 trades today because it's in, out, in, out, in, out. And it's just to protect myself a little bit and give my cash a little something to do. It's just sitting there. It's not really getting any interest at this point. And it's something that I need to learn more of and probably get a little bit better at. But I'm still of that mind. You know, I'm buying and holding, I'm acquiring, I'm building up my wealth over a long period of time, kind of thing.
Yeah, absolutely. And I, I respect that you're like, well, it's not my strong suit, and I'll approach it very cautiously. Hey, learn more about it. I'm here to help you, buddy. Let me.
I appreciate it. And I have learned a lot. I was thinking about today. I was like, how long have I been listening to this guy's show? It's like I was before I was married and had kids. So we're talking at least. My wife will kill me. I don't know how long I've been married, but it's been at least 8 or 9 years.
Don't tell her that.
Yeah, right. Yeah.
Real quick, let me go to this question from Tom. Tom is good. He says, if you measure the angle of the sell-off from the pandemic crash, right? So I've got that right here. And he says, if you move it over, it might give us some indication. Well, granted, you're not going to have the same reaction. This was that pandemic sell-off was apocalyptic, right? It was like, holy crap, a virus is going around that's going to kill everybody, right? That was just like freaking the world out. And we had weapons. So back here, there were so many things the Fed and the government could do. You could issue money. You could cut rates, which is what they did. Hell, send out $1,200 checks to every American that qualifies. You could do so many different things. What's different now is you can't do so many things. You can't send out checks because that would just further put more money supply out there. You can't cut interest rates because you got to fight inflation. And now, again, it's walking towards that stagflation argument of, you're damned if you do, damned if you don't. So I think this is a very different situation than what we had with the pandemic sell-off. And, we'll see what happens over the next 6 months, 8 months. But I agree with Colin. I think that the roadmap has been pretty clear by the Fed, and we'll have to wait and see what these earnings look like going forward. If this does slow down, then short the market. Go with the trend. Go with whatever that trend is. In this case, it's short rallies. I mean, it's been this sell-off we've had since I got stopped out, which really pissed me off. I had a whole bunch. We've fallen, let's see, 16.8% on the S&P since March 30th. That's pretty significant, and I think that might continue. Okay, I got a bunch of people asking me about crypto. Everyone wants to know about crypto, and I'll do a deep dive after with regards to Luna and UST and all the mechanics of what happened there. What's your take on crypto? I know that you're an evaluator. You like to look at valuations and fundamentals, and it's hard with crypto to look at the fundamental side of things. So first off, what's your thoughts on crypto, and I guess what are you excited about?
I really like crypto. So I knew about crypto way long time ago because I was into online gambling and stuff like that, and that kind of where I first heard about it. And people were like, I remember somebody had like an online poker site. They would give you Bitcoin to go play. He'll give you like 3 or 4 of them to go play. And obviously a lot of people that remember crypto in 11 and 12, a lot of it was tied to Silk Road and some nefarious stuff. And so not a lot of people jumped in early there. I think I got in sometime in 2014-ish or somewhere in there. You could gamble on a fantasy site and then withdraw it in crypto. And so I just kept a crypto balance for a long period of time. Ironically enough, my favorite Super Bowl team, or my favorite team, made the Super Bowl this year, the Cincinnati Bengals.
Wow.
And so I actually sold all my crypto back in January to buy a ticket to the Super Bowl. So in hindsight, it looks really good, but I held for a very, very long time. I think I totaled my cost basis out to the Super Bowl. It only cost me about $200 and something because that's how much crypto appreciated, or Bitcoin in this case appreciated over that about 8 years or so. So I really like crypto. I like the people like try to separate crypto from blockchain. they are the same thing. You can't have the blockchain without some kind of reward token or some kind of token system in there. So they go hand in hand. I see a lot of use cases for it. I think it's fantastic if you're trading because it trades a lot on technicals. So when I look at the technical chart of Bitcoin, there's a lot of very predictable movements that it makes. And it's extraordinarily volatile as well, which makes it great for trading. I think it's something that I will, like, I'm cleared out of crypto right now, but it's something I will buy back into at some point. I'll look at the charts. I'll look at, kind of the fundamentals on it. And just, I think for me, it's like, okay, if I have $100,000 portfolio, I'll probably have 90,000 of that into mega cap equities, paying me dividends, growing, all that types of stuff. The other 10% can be divided amongst crypto, other types of assets, collectibles, gold, silver, jewelry. There's a number of different other kind of alternative assets. That's really where I put crypto. It's an alternative asset. I think it has huge merit. I think it will disrupt the financial system at some point. When they allow that to happen under some kind of regulation is more or less up in the air. And given the politics in Washington, who knows when that'll happen.
Right.
But to me, crypto is more of a trading asset. If I wanted to generate income off of it, I would trade it. If I wanted to buy and hold it, I would wait for these like flush out moments where people get flushed out. There's a lot of people trading it on margin. There's a lot of hype around it. So when that hype goes away, when the margin calls hit, look, it's going to be actually really hard to buy it at those levels because everybody's going to be like, Bitcoin's going to go to zero. Instead of Bitcoin going to 100,000, you're going to hear in a month or two, Bitcoin's going to go to zero. Okay.
Yeah.
And that's when you step in and buy. When people are like, this is going to zero, it's going to be worthless. That's the time to step in. And
Well,
I'll definitely step back in.
I'll say that with a cautionary note because there's some stuff that's going to go to zero and never come back. We're going to have a shakeout period, which I think we're in the midst of right now, where a lot of these are going to just disappear. The tide's going to go out, and we'll see a lot of people not wearing clothes in the water. So, yeah, it's exciting times, fun stuff. Tell our viewers about actually two things. First, let's talk about Tesla, because there was a question about Tesla asking, what price do you think Tesla has to get to actually be at a fair valuation?
Oh, I mean, that's such a good question.
I'm sure you've looked at it.
Yeah, so it depends on how far you're looking out with Tesla. Okay, if you're looking at the next 12 months, okay, it's wildly overvalued. If you're looking at the next 24 months, probably still overvalued. Probably not wildly overvalued, but kind of overvalued. If you're looking out 5 years and you believe the thesis that they're going to be able to continue to pump out these cars at a 30% gross margins. So last quarter, Tesla reported their earnings. Their vehicle margins were 30. The gross margins on the vehicles they sell was 30%, which is unbelievable. It's Apple iPhone like, okay? And we're talking about a product that is 40 times the cost of an iPhone. Mm-hmm. So, and I also think that the upcoming competitive environment will be more difficult on Tesla's competitors than it will Tesla. And so with Tesla, you've got to have a 5 or 6 year view out. And I was looking at the Tesla chart. It was interesting. I pulled up like a monthly view of Tesla, and this thing just staircases up. Okay, it goes sideways for a while, makes a big staircase up. It goes sideways for a minute and then staircases up. And I think we're just kind of in the midst of that right now. It's got I see a $750 billion market cap on this one. I mean, again, next 12 months of sales, 24 months of sales, it's crazy. Mm-hmm. Okay. But if you look forward and say, look, if they continue to increase their sales the way they're doing, and they're at full capacity right now. I have Teslas that I've been trying to get, and they keep pushing. I was supposed to get one in February. They pushed it back to March. I didn't get it then. Now that it's September. So they clearly have a strong demand for their products. If you think that demand is going to stay there, and you've got tailwind of $6 gas, particularly out here in California, which is their number one market, then that valuation starts to make a little bit more sense. Mm-hmm. On top of that, they're cash flow positive. They're no longer doing equity funding and diluting you as a shareholder. I think they have $18 billion worth of cash. So they have plenty of cash. So even if we hit some kind of bump in the road, not saying that their stock wouldn't pull back, but it's still on the speculative side. Okay.
Totally.
You know, if I was to weigh where I put Tesla in my portfolio, there's a lot of people on my channel that I'm all in on Tesla. I'm 90% Tesla. I mean, you're absolutely insane if you do that. But if you want to capture growth over the next 5 to 6 years, I think it's a premier stock for that. You know, like this valuation could easily double, I think, in the 5 year. This could easily go back to a $1.5 trillion company in pretty short order, if they maintain those margins on the car and the demand stays there, which again, big question, depending on where interest rates go. If interest rates go to 7% and you got to buy a car and it's 9%, like, are you going to be really out there trying to buy a new car? Are you trying to buy a Tesla with a 9% APR on your loan? I don't know. So we'll see, but it doesn't make, the valuation doesn't make sense today, doesn't make sense tomorrow, doesn't make sense 12 months out. But 5 or 6 years out, which is kind of where my focus tends to be, it can absolutely make sense considering they just they just got China, Germany, and now Texas pumping out cars. It's basically tripled their capacity over the last 12 months. And so that alone that'll get the sales continuing to rise, at least over the next 12 months or so.
You know, I would, as I bring up the chart here, I'll just kind of piggyback off what you said. Look, I don't usually look at the valuations, but if you look at what's going on with Tesla right now, this is the proverbial rising tide floats all boats. But when the tide goes out, you know, you get some boats stranded on the shore. And I think that regardless of what you think of Tesla, and I'm a fan. I gotta say, I am a fan of the man, Elon Musk, and the company Tesla and what they do. That doesn't mean that this thing can continue on up right now. I mean, if the markets keep selling off, if we get this S&P rolling over and NASDAQ rolling over and rising rates, this will continue down. So, you know, if you think it's a good buy now, maybe you just hold off. If you really think it's a good buy now and you want it, then buy some. But I would keep some dry powder because, you know, I'm looking at levels down here around 400 on Tesla, which you might think, that's inconceivable. It's too far away. It could easily get there. I mean, the way markets move. What's that?
Yeah, it could be there next week.
Yeah, I mean,
it wouldn't surprise me at all. It
wouldn't
surprise me one bit.
So, you know, I think you can't ignore the big picture. I think a lot of people out there are looking at these markets saying, hey, I want to buy back in. We're down 20%, 25% on some of them. I mean, Amazon, Microsoft, all down 20+%. You're probably thinking, great, it's a good buying opportunity. It is, but it might be even better at 30% or 40%. So, you know, don't rush to buy in. And there was a comment that came in earlier, which I think was very interesting. Somebody says, you know, well, if I follow that strategy and wait for the market to turn to buy, I'll feel like I'm too late. Look, if I take a range of, let's say, $100, let's say it's moved $100, and it's still drifting down, and I let it curl up, and maybe I'm in $20 off the bottom, I'm still going to make a lot of money. But you're not buying something with the hope that it goes up. You're buying something because it is going up. The chart has told you. And I think that's be okay leaving money on the table, man. It's okay. No big deal. As long as there's enough meat on that bone for you to make a good amount of money or reach your objectives, then fine. And time will tell what all this looks like, you know, years down the road. And don't be too eager to buy something because you think it's down 20%, because it could be down 50 or 70 or 80%.
Oh yeah, and with fractional share trading and virtually $0 commissions, in my opinion, there's no good reason. Back in the day, I mean, back in the 90s when it was $40 to put in a trade, yeah, you had to like buy a portion of your investment to make that $40 work on that commission fee. Now it's zero, okay? And you can do fractional shares. If I wanted 10 shares of Tesla, and that'd be about $7,000 some odd dollars today, I'd buy half a share at a time, maybe one share at a time, you know, and just wait, okay? Because this stock, when it moves up, I mean, this is like a pure momentum stock, okay? Once the momentum gets out of it, it's going to drain down, but when that momentum gets back in, you can ride that momentum all the way up. You know, like you said, the trend is there, and right now the trend is down. The easiest trade is to the short side, okay? And you play that trend until it kind of wears itself out. Because quite frankly, the trend has been up for stocks for over a decade, Okay. And so we kind of have to reset our minds. People that have been in these markets for the last 10 years, you got to reset. I think we've got to all reset ourselves to presume that these valuations are probably not coming back anytime soon.
Right.
It just doesn't. And if they do, great. Maybe you have some, I'm still fully invested. Okay. I still consider myself in the markets. Okay. And those will appreciate. But I'm not dumping my cash in and making my kids eat macaroni and cheese so we can buy Tesla stock this week. Because like you said,
your kids probably love mac and cheese.
Yeah, they do. Yes, they spill half of it on the floor. That's the problem. But this thing. I mean, I see 600 down 617, 615 or so. That's the next stop. I feel like. I mean, that's $200 lower than where we're at today.
Yep.
So I mean, I'd be in no hurry to run into these markets. Now, we should have some kind of rally. I mean, just from a technical perspective, just a market psychology perspective, we should have some massive rally here, 5-6%, maybe over the course of 2-3 weeks or a month. I'd be a seller. I'd be selling and taking profits on those types of moves.
Oh, all right, man. We got a lot of stuff covered there. What's your schedule for video release? I'm at your channel right now, the Investor Channel, guys. This is his channel on YouTube. He also has Instagram as well and Twitter. How often do you release?
So during earnings season, which we're at basically right now, I'm doing 2 or 3 videos a day. I try to pick the stocks that are interesting. There's the core group that I'm invested in, but I actually do more videos on stocks that I'm not invested in or not interested in. But basically during earnings season, I pick as many of the most investable stocks. Like I think Affirm came out with earnings today. I'll probably do a video on them. But we're kind of towards the end. I think we get Walmart and Target next week, and it kind of winds down. You get some smaller cap companies over the next couple of weeks. I have a regular Friday show where I basically recap all the major news of the week and the technicals from all the major FANG stocks, including Netflix, Microsoft, Tesla. So every week I'm covering essentially the markets, because if you look at an S&P 500 index, it's mainly Apple, Microsoft, Google,
right,
Facebook, and those types of stocks. So every Friday, I do just try to do a 30-minute show, kind of recapping what happened news-wise, but also from the price action perspective. So every Friday, I have a show. I try to do kind of a macro video based on where we're at right now, like on a Saturday or Sunday. It's tough. I got kids. I've got, it's wedding season. Every freaking person I know is getting married now or having a baby or something. So, schedule permitting. But during earnings season particularly, I pump out as many videos as I can, because that's what, in my opinion, if you want to be a great fundamental investor, the PE ratios, price to sales, that's going to take you to like 3rd or 4th grade. To get into like high school and college, you need to be pulling up the balance sheets, the statement of cash flows, the profit and loss statements, and analyzing the business from that perspective. And that is what I've been doing for a really long time, longer than I've had the channel. And I just try to share that because I really don't think that's done enough, quite frankly. I don't think enough people look at the profit and loss, the cash flows, and then make judgments based on that. And I would say it gives, similar to like technical analysis, it's not perfect, doesn't work every time, but it gives you a much higher probability of success. And my videos, I try to make them 10 to 15 minutes. It will give you at least a really good starting point to understand what's going on with the company financially, and then you can take that on to maybe some other knowledge that you might have of a sector or a given stock.
Well, you do great work, so I appreciate all that you do. Thanks for coming on and giving us some insights into ARK and into the overall markets and this valuation reset. I'm looking forward. We'll have you on more than once a year. I don't know how it's possibly been a year since you've been on, so I'll reach out to you maybe a month or two, and we'll get you back on. But thank you so much. I appreciate it.
Thank you, Merlin. Always a pleasure being on your show, and just been a fan for a long time. So
thank you.
Thanks so much.
Me too. All right, man. Take care.
Thank you.
Guys, that was Colin Tedards. He's got the Investor Channel. I'd encourage you to check that one out. He's got all kinds of just epic reviews, especially from the fundamental perspective. Here's why I like to use Colin's site. I'm lazy. I don't like to do fundamentals. I hate looking at balance sheets. It reminds me of my college days, and that stuff bored the hell out of me. I let Colin do the work. And after seeing the stuff that he does, I can go, okay, you are in line with what I want to think, and you're objective about your analysis. So I'm glad he came on. Hopefully we'll have him on more and maybe do specific things during earnings season. It's awesome. I see some comments about Tesla truck. Look, Tesla, you may think that new Cybertruck is the coolest thing in the world. It's not on market yet. Now you have so many trucks already out there. You've got the Ford Lightning coming out, and GM's going all a bunch of trucks. You've got Rivian's already out there. So, you've got a lot of competition going to start to eat away at Tesla. So I think that part of the forecast for Tesla's earnings going forward need to include some of the loss of business due to competitors. But they're still the lead dog. They still make the best vehicles, at least with regards to electric. So I've been told. I don't have one. I am okay going with the gas guzzler. I'm fine with the gas guzzler. All right, let me spin topic here. I find your lack of faith disturbing, young Jedi. Let's go to our overall markets. Obviously, for those of you who are in the crypto world, you are witnessing history. You are witnessing some of the most amazing price action that you've ever seen. You are witnessing stuff that will shape and define the entire cryptocurrency ecosystem. Here is Luna. So Luna, it's interesting. In the CIL, we had talked about it a while back, and I personally looked at this one, and I was like, you know what? I like it. I like what they're doing. It's interesting. But then I saw some other people saying that this was a scam. It's a Ponzi scheme, blah, blah, blah. So I didn't really push it. I didn't own any Luna at the time. I do now. I bought some. As you guys know, I bought some at 48, bought some at 46, and I bought some at $4, and it's now at 1/2 of 1 penny. So we'll take a loss on roughly almost $13,000. I'm going to still keep it. But it all kind of boils down to fear, greed, and understanding how these things are constructed. Now, the main reason you saw Luna do this is because it is tied at the hip to something called UST, which is a stablecoin. And here you see stablecoin for UST, which should be stuck at $1. It is currently trading at 48 cents. So if anything, it should change its name from a stablecoin to an unstable coin. Now, I'm not going to go into all the math and what's going on behind the scenes here, but bottom line is this is an oh shit kind of moment where crypto world is freaking out, and in order to back up this peg and try to bring UST back to $1, they are liquidating Bitcoin. They're forced to sell Bitcoin to shore up the peg and get this back up to $1. So in order to do that, they transferred over 41,000 Bitcoin over to Gemini and started to unload. And therefore, you see Bitcoin taking a huge dump here over the past few days. Now, of course, as goes Bitcoin, so goes everything else. And what it's done is it's exposed the world, which I've known about this, and many of you have as well. It's exposed the world to this over-leveraged ecosystem. For example, I'm in the US. I can maybe get 5 times leverage. I can use some international sites and get maybe 10. But there's people in Korea and Japan and other countries around the world that can get 500 to 1 leverage. Now, what happens is a small move. When you're at 1-to-1 leverage, you can just sustain a big move up and down because you're cash. If you are sitting in, let's say 100 to 1 leverage, a small move can liquidate you like that. So what you're getting right now is an onslaught of liquidations. The market dropped fast enough and so quickly that anybody who was holding these leverage longs is being forced liquidated. There's no choice in the matter. They literally just say, we're selling this at market, which fuels the fire. So what you're getting are these sharp spikes down, right? You're getting real sharp moves. You're also getting a flight to security. So in many cases, there's a bunch on this list that I would say are shit coins or aren't the best coins in the world. Where's it going? It's going back to the granddaddy of them, which is Bitcoin. Again, Bitcoin, I did add some more to my Bitcoin, added some more Ethereum, but I do think we are going down more. Let me repeat that. I think we are going down more. I am kind of a believer in this model. It's called the 4-year cycle, which paints a target on Bitcoin at 10,000. Now, I don't think we'll get there, but if we get to 10,000, you have to understand that there are a lot of forces going to push this thing very quickly, because you have somebody like Michael Saylor, who has at MicroStrategy, I think somewhere around 140,000 Bitcoin. He has collateralized loans for that Bitcoin. If it gets below a certain point, he may be forced to liquidate those Bitcoin. And what do you think is going to happen? It's going to sell off even more. So we're in this panic moment, which is okay, right? We've had these moments before. This is by no means the first time this has happened for Bitcoin or the whole crypto industry. Typically what you get is an aggressive panic selling marketplace where the weak hands sell their crypto or they get margined out and they're done. And then what you get is a consolidation for a year or two, and then the next cycle starts to the upside and you get a huge bull market move. I think that's what we're in the midst of. I think we're in the midst of the first year of a 4-year cycle, which is first year is generally just nothing but down. And I think that's where we are right now with crypto. So I'll get to the in a second. Wait, so Luna purchased Bitcoin on leverage? No. Luna didn't purchase Bitcoin on leverage. So there is a company that, and I can't remember off the top of my head, my brain is still foggy from Vegas, but there's all these layers to Luna, and there's this one component of it, it's not Jump, there's another name, and I cannot think off the top of my head, that was buying Bitcoin to help collateralize and kind of back up UST. But because UST dropped so quickly, and there's a lot of mechanics there's liquidity pools that were absorbed, there was all sorts of intricate pieces, which are complex. But basically, in order to get the money so they could put it back into UST and keep that peg, they moved that Bitcoin over to Gemini and sold some or all of it. I don't know. So I can all in when Bitcoin hits 10K. I would never say go all in on anything, but I will assure you that if it does get to 10K, I will be buying a bit more. Now, 10K seems so far away. Look at the price chart, guys. Here's 10K. I'll do exactly 10,000. It's not like this thing was 10 years ago. It's not like you're seeing historic lows. This is back to 2020. October of 2020, we were at 10,000 on Bitcoin. If you go all the way back to March of 2021, we were at 4,000. So it could certainly go back to 10,000. Obviously, I don't want that. I wouldn't like that. But if it does get there, I'll get some more. Again, my timeline is 10 years. I'm 5 to 10 years is where I'm shooting for Bitcoin. I could have sold it a long time ago when it got up to 60,000. I still think we're going to 100,000. I was really surprised. My call was for 100,000 by the end of this year. I made that one almost 3 years ago and got close. Given what's going on right now, I don't really think we'll make that target, but you never know. Crazy things have happened out in this ecosystem, so it's a wild one. I have a friend that said, I wish I had bought Bitcoin at 25,000. Now is your chance. Now, yeah, you know what? Most people, when markets are falling like this, people don't want to buy. When markets fall like this, I want to buy. The rolling 120,000 has been on the masses' minds for a while now, you think? You mean 120,000 for the price of Bitcoin? It could be, Alan. It could be. It definitely could be why it didn't make it to 100,000, but it is what it is. I think ultimately we will get there. Let's see. Yeah, but that's different, Patrick. Patrick, because you remember when oil went negative? That's very different because you had storage costs, so there was a risk associated with it. There's no storage cost for Bitcoin, so it won't go negative. It can't go negative. Not going to happen. Yeah, as far as 120,000 on Bitcoin, I think 100,000 is your main target that it's going to have to challenge and get to eventually. But, a lot of crazy stuff out there. I actually, bought some Luna. I was going to buy some more and when it was under a penny. But, this is probably going to go to zero. And what's bizarre is the way that Luna's trading today under 1 penny. You got to understand that there's so many big institutions behind this. Galaxy Digital is a big time one, and they're backing Luna as well as several other VCs. So I have a hard time believing that this one's just going to die, which is why now that it's half of a penny, I might now buy another $1,000 worth. I was joking with the CIL today. I was like, hey, if you guys say yes, I'll buy $5,000 worth. If you say no, I won't. They said no, so I think I'm just gonna buy 1,000 just for fun. And, I don't think this is going to be up at $120, but if you can buy some, which is really hard. Oh, yeah, Tether. So Tether has gotten safer. For those that don't know all the logistics, Tether was my original canary in the coal mine with regards to stablecoins. It was this bizarre entity that was supposed to have dollar for dollar back in cash, and come to find out they had 3.87% of the holdings in cash. The rest was in corporate debt. Really, you don't know what it was in. They still have not disclosed what they held. They just said corporate debt. Well, corporate debt brings you into the category of junk bonds, and that to me creates a systemic risk. Now, 68% of their portfolio was in corporate debt. Now they say it's 30%. I still don't trust it. There's only a couple of stable coins out there that I would trust because they are backed 1-to-1 by dollars or government bonds, and they have been audited by a reputable firm. That's the key, is it needs to be audited by a reputable firm. Yeah, Christian. Crypto losses down 1.7 trillion. We were up over 3 trillion, and now we are like 1.2. It's nuts. Absolutely crazy. Mike Hill from MicroStrategy is saying 120,000 Bitcoin. Oh, yeah, no. No, there's no way. That would be one of the craziest things that you've ever seen. That might be more crazy than watching, Luna go to zero. Would be watching Bitcoin go from its current levels to 120,000 next week? No way. Not going to happen. That would be a $92,000 gain. Not going to happen. I mean, I wish it would. That'd be great for my portfolio. If it got to 120,000 by next week, I'll sell all mine. Steph wants to know about Ethereum. I'm a fan of Ethereum long term. If they can't get over to proof of stake quickly, I think they have some serious problems. I bought some Ethereum today as well at 1,800. So I'm long-term. I think Ethereum will be fine. It has the dominant ecosystem. It has the most programs, the most technology, the most established businesses on it. So there's a symbiotic relationship there where these companies are all dependent on Ethereum. So I'm okay, bullish long-term on Ethereum. I think that there might be some problems here with the stability of their price if they can't get over to proof of stake quickly. I think there might be some problems with miner transition, but once it's done, I think this will remain the lead dog. Let's see, subprime mortgage market was 1.3 trillion. Yeah, I know, and that's why I mentioned, you look at this event here, this is historic, and it's not just the fact that Luna looks like this. This is absolutely incredible. It's that you have a stable coin, which, I feel really bad for people who bought a stable coin with the intent that it was going to keep their money safe and keep it level and not lose value. And here you are, down 58% on your investment. It's insane. It's unfortunate. Wanted to ask about the Ethereum and Bitcoin merge. They're not merging. They're not going to merge. They're two different technologies. Bitcoin will always be Bitcoin. They will never merge with Ethereum. Definitely not. All right, let me wrap up here because I have to go, and I have 3 minutes left. I wanted to just bring up the economic calendar for tomorrow, which is this bad boy. The inflation numbers, as you guys saw, our CPI was worse than expected, and the PPI was in line with expectations, so nothing really dramatic that came out today with regards to PPI. This is what's happening for tomorrow. You have import prices, University of Michigan consumer sentiment. You also have an FOMC member speaking. That's Mester, but not that important one. We're trading the Euro, French final CPI, as well as industrial production, and that is it for your Friday session. Now, we will see what happens with tomorrow's show, but I don't have a guest scheduled right now. So do me a favor, send your questions, your comments in. You can send them into TraderMerlin@gmail.com or put them down below the YouTube video. That's the best way to get questions. Unfortunately, I did not get to look at those today, so I will catch up on our Monday show. I'll look at all those questions on tomorrow's as well as ones you get for tonight. Consumer sentiment, LNG says consumer sentiment is the most important, I think. For tomorrow, yeah, but it's not really that powerful of an announcement. I think that, and this is just me personally, over the years, I used to follow consumer sentiment a lot. But I actually took a step back and just said, let me just talk to people. And that was where I got my consumer sentiment. And I can feel that sentiment is dropping. And that's the expectation that's going to happen here with this one as well. So I wouldn't put too much stock in it, but it is one coming out. Hey, Ron, thank you very much. And thank you, everybody, for joining us today. Good to see you, Ron and Lori, up in Vegas. And I'm sure there's some others lurking in the background who don't like to talk, but there was quite a few OTA grads in there. So thank you guys for showing up. If you want and you get an opportunity, check out Colin Tedards at the Investor Channel. If you are interested in a specific stock or something, check it out. He always does very, very, very thorough, objective analysis. Love it. Good stuff. All right, that's going to do it for me, everybody. Hope you have a fantastic remainder of your evening, and I will see you all tomorrow. Take care.